Good afternoon, everyone. Thanks for attending our next session with ValOre Metals. My name is Joe Fars. I'm a vice president here at Red Cloud, and I'm moderating today's session with CEO Jim Paterson, VPX Colin Smith, and IR Dustin Zinger. ValOre is certainly a key story for the green energy space. It's focused on its flagship Pedra Branca PG asset in Brazil. It's expanding upon an already defined resource, has a high PG tenor, and it's across an entire district. And that district's already demonstrating new discoveries with a lot of exploration upside. And I'll also just mention that the company is part of the Discovery Group, which is an alliance of several companies that have demonstrated massive exploration and mining success with a proven track record. So I'll leave it there and turn it over to you, Jim.
Thank you, Joe. Pleasure to be here today with you. Today I'm going to cover the company itself and the team, talk a little bit about the impact of the push to ESG and electrification on PGEs, so palladium, platinum, rhodium, etc., and uranium, and then how that relates to ValOre's two projects, its flagship project, the Pedra Branca project, palladium platinum project in northeastern Brazil that you were talking about, and also our uranium project in northern Canada. And then finally, we'll sort of round off the presentation with some 2021 catalysts, what you have to look forward to for the rest of the year. And you did mention the Discovery Group, so we're a proud member. ValOre is a proud member of the Discovery Group. We've got 10 public companies in the group. You may recognize some of the names on the screen here, but first and foremost, we look to build the platform with very high quality people. We find that very high quality people will attract great deal flow and capital and kind of feed on that success. So it's all about the people. And we've got discoverygroup.ca if you want more information on the group. This company, ValOre Metals Corp, is trading on the venture exchange under the ticker symbol VO. Of note, we've got some really good support from Red Cloud when we raised money earlier in Q1 this year. So we've got some new resource funds that have joined as investors. And then a key element, I think, if you're following any small company like this straight on the venture exchange, you want to see a high level of insider ownership. So we've got over 20% insider ownership of the company currently. I think we've got one of the better or best boards out there on the junior sector. We've got really good mix of capital markets, executive, geologists, mining engineers, lawyers, Brazilian exposure, and a really strong technical team led by VPX Colin Smith, who's on the line today. If we just kind of want to break down the usage of PGEs and what that might, the application with respect to ESG, the big thing is that a little bit of palladium and platinum is used in every car that has a catalytic converter. And the purpose of the catalytic converter is to reduce noxious fumes. So we can all agree that as we go forward, governments of the world are going to increase regulations, increase control in an effort to reduce pollution, and particularly in markets like China and India, where those populations are buying cars in record numbers and really ramping up those production volumes. The governments are clamping down on pollution. And currently, they are doing that with the catalytic converters and loading more and more palladium and platinum into these cars. What the future brings, we don't know in terms of the complete electrification of every single automobile on the planet. But between here and there, we think you'll see a lot of vehicles that are hybrid vehicles, which still use palladium. And then who knows what the new hydrogen economy will bring. But there is a usage for palladium in that world as well. One of the things that we just sort of look at an industry that will get squeezed or has kind of supply constricting, I think the jurisdictional risk around where the primary supply of palladium and platinum is derived is pretty critical. Right now, there's a lot going on in South Africa from a jurisdictional risk perspective. The rhetoric around the US government's or administration's policy towards Russia, that is some risk there from a jurisdictional perspective. So where these metals come from is important, as well as who produces them. And that as well is, I think, kind of a very small group. I wouldn't say a monopoly, but an oligopoly there of producers. Their collective market cap is less than 100 billion US, but in that range. And if you look at sort of all the other collective market cap of all the other explorers and developers out there, they're around a little under $1 billion US. So the top 5 producers in the world that produce 85% of the world's palladium and platinum in primary supply are substantially, almost 100 times bigger than all the developers combined there. So they are transacting. You've had a year and a bit of very high prices for palladium and platinum, and the big producers of the world have cleaned up their balance sheets. They've generated a lot of cash, and they're looking, I think, outwardly for big transactions in the precious metal space. It may be gold deposits or other palladium or platinum projects, but they're cashed up and ready to make acquisitions to diversify from a jurisdictional perspective. From just some information on our project, the Pedra Branca project is in northeastern Brazil in Ceará state. The biggest city nearest to the project is around a 4-hour drive. You would land in this beautiful airport in Fortaleza, which has about 3 million people on the Atlantic Ocean. There's a deep water port there. And if you want to come visit us at the property, you can drive in on 1 or 2 highways. These yellow lines represent the highways that go right to Brasilia in the center of the country. And they pass by our project right here, which is called Pedra Branca. This is the town from which we base our operations, called Capital Mor, a little less than 1,000 people. And the important thing we like to showcase here is this is not rainforest. This is dry, arid ranch land. Here's another picture of what it looks like. Very easy to get around. Great roads, lots of farms, really good access and great community support. In addition to regional infrastructure like ports and roads and airports, power and water. There's also a heck of a lot of data that previous operators have generated that we've kind of used as our foundation to start as we move forward in exploration. So roughly about $35 million US has been spent by all the operators in aggregate prior to us. And that leaves us in a very good position to make discoveries and expand resources going forward. So in general, in 2021, we focused on team building, expanding resources, drilling targets that had been previously drilled to try to bring them up categories into the inferred category. We have an exploration methodology that's working out really well. Colin's going to walk you through that, but it's been able to generate discoveries and advanced targets. And I think we've been very successful in terms of drilling and trying to expand resources. And then in parallel to that, we're running a whole raft of tests to determine the best methodology to advance a project in terms of development, metallurgy, processing. And we're hoping that we'll be able to come up with some plan after our resource estimate in 2020, early 2022, and then wrap in a PEA right after that would wrap in some economics. So that's our focus for the rest of the year. And I'll turn it over to Colin to take it across the line.
Thank you, Jim. Thanks. And so what I'll do just quickly is explain, a summary of our ongoing 2021 drill program. We've completed about half of the meterage in the core program and all of the meterage in the RC program. So about 3,300 meters drilled in the core, 1,800 for RC, testing property-wide targets. And as Jim described before, 3 styles of targets. So straight resource expansion, how can we add ounces to the existing 2019 43-101? Secondly, target advancement. So how can we advance some of the pre-resource targets like CO4, Canabrava to inferred resource stage? And then lastly, the new discovery style targets. So these are ValOre generated through the exploration methodology using Trapla auger drilling, trenching, prospecting mapping to advance those to a drill ready stage. And we've released already 20 news releases this calendar year. A number of those are assays related for drilling, and there's many more to come. And in addition to that, we recently acquired just about 16,000 hectares of additional ground that you see in the black boxes there, staking over 50 additional kilometers of very prospective geological trends. So exciting exploration to come. Now what we're looking at here is a cross-section through one of the 5 deposit areas which define the current resource, this being the Asparo deposit. It's about 400,000 ounces of the million. And the key point here is the fact that we're seeing mineralization at surface. So all 5 of the deposit areas, these are open pittable style targets. And in terms of the drill trace there, anything you're seeing at all that's coming out of the drill trace is at or above the resource grade. And you can see the scale bar on the bottom of the hole trace. We're seeing grades up to 40, 45 grams per ton or higher. And so, those are underground style grades, obviously, but these are all open pit style targets. Every single one of the deposits comes to surface. So this is sort of a summary of the existing resource. You can see the top left map. There's location. 3 of the 5 deposits are within a 5-kilometer radius of each other, sort of in the center of the project area. Pink denotes the PGE grades down hole, and obviously we're looking at surface deposits here. So from a mining standpoint, very, very compelling. This gives a cross section of some of the drilling we've done in 2020 and ongoing in 2021 of the Trapla deposit area. This is the southernmost of the 5. The location of the section is illustrated in the top left inset map there. Yellow dots are 2020 holes, red and orange being 2021. And so the section itself, the only hole that you're seeing there, which is historical, is the second from the left, TU06. So last year we stepped up dip of that, drilled TU10 and had a nice over 50 meter interval of 1.25 grams. We then decided to step down dip to the east and test the depth, extent, and potential of the system. Drilled a really nice hole in TU12 over 100 meter interval. And then this year, one of the standout holes to date is TU21, which is over 70 meters of 1.3. So really, really nice interval there. And this thing is fully open along strike to the north, to the south, as you can see here. We've stepped one section line down to the south, and in particular, we'll focus on TU20, which was an excellent hole from last year, over 76 meters of 1.25 grams as well. And in particular, within that interval is a nice 30-meter patch of 2.33, and you can see Jim just scrolling his cursor over the grade. So those are gram per ton in red on a meter-to-meter basis through that 30-meter interval of 2.33. So really consistently mineralized. We're not seeing a couple high-grade samples and then a bunch of 0.1s or 2s. We're seeing nice PGEs throughout the section there. And again, still at Trapla 1 here, what we're showing here is what we've done to date in terms of resource expansion in this deposit area. The existing resource area is anything above the dashed black line. So that's the optimized pit constrained resource. All of ValOre's drilling from last year and this is within the green hashed area there. So as you see, it's fully open along strike to the south or to the left of the image, and PGE grades in pink. So just from a simple visual perspective here, you can see the expansion potential at Trapla 1 is pretty significant, and it continues to grow.
Jump in here, Colin, quick. In terms of what we really focus on is looking at what's been done in the past and seeing how we can improve on it, and by incorporating new innovations or just really going back to basics in terms of exploration. So we've done kind of a combination of that with our targeting methodology. This is a vision here of some of the highest resolution commercially available satellite imagery, and we've combined that with 3D mag to really identify the best targets on the project. And then we're going back to the old school. This is a little like a lawnmower engine or an auger. These crews of 4 can move in easily with trucks. And then actually it's very mobile. We can walk right in and test these targets. So we're able to kind of take it from desktop and get right in and identify the rock units and then send those rock samples off for assay. So we're taking that kind of mentality, some of the old, some of the new, to try to make things better. We're also running a raft of tests, as I mentioned, between now and the end of the year, just to figure out the best way to optimize what's necessary from a metallurgical perspective. So news to come there. And then I'm going to move on in the short period that we have to just go really quickly into our uranium project, which is in northern Canada and Nunavut territory. And a couple things that I really felt were interesting. This is from the World Nuclear Association site, which I think is one of the best places to get information on the nuclear business on the demand side. And if you look at China in 2011, so 10 years ago, they were consuming roughly 5 million pounds a year of uranium. And that's grown almost to 20 in 10 years. And they're adding another 17 reactors, which is roughly another 7 million pounds a year of uranium. So that's a big growth market. But conversely, if you look at the world market for the global demand, 10 years ago, if you look at the February 2011 number, which is a month before Fukushima happened, which really decimated demand and the investor demand for uranium, there were 443 reactors operating globally. And if you look last month or this month, it's the same number with a little bit fewer under construction and very similar consumption numbers, which is pretty crazy if you look at the demand then 10 years ago and now. And the price then was $70 a pound, and spot price today is 32. Even in this inflationary environment we have over the last 10 years, the prices come down. And what's really shocking, if you look, this is from our friends at Energy Fuels, slide number 7 on their most recent deck. But look at 2011, which is what I just showed you with the Chinese demand and also world demand. You see that the production from the North American producers continued on unabated even after Fukushima. But look at how the production fell off the cliff the last few years. And this is obviously going back to 2019. But you get the point that even though the demand is fairly similar, the production numbers have come way down from North American producers. They've been chewing away at the inventory. And we think that will cause at some point soon here a movement in price. And then the fuel buyers, I think, will jump in and contract at higher prices, which will, of course, be great for all the uranium explorers. So we have spent over $55 million in our project, which is in Northern Canada, Nunavut Territory. All of the 43 million pounds that we've identified at 0.69 are kind of represented by these orange squiggles, which is along the basin margin. We've got almost 50,000 hectares around the northern extent of this sub-basin, which is called the Anjikuni, similar to the Athabasca, just a sub-basin in Nunavut. And just quickly, we've drilled over 300 holes, which I've identified these 5 zones of mineralization. These zones of mineralization are identified here with these purple blobs you can see. And so the 43 million pounds live along this one structure. But what's really exciting in terms of upside is that you can see from these geophysical anomalies, these geochemical anomalies, and the drilling that we've done, that we've actually drilled into similar intervals in terms of geology and widths. We just haven't drilled to the density to bring it into a resource category, but these are all parallel structures, and you can see it on all of these 3 levels. So we've made over, in addition to these 5 zones, we've actually identified 7 other discoveries in the area, which have been named through the drill bit, and then drilled all these other targets on the property and hit similar types of uranium. So huge upside to the existing 43 million pounds. This year, we'll be doing a lot of desktop work and studying hyperspectral with satellite imagery, 3D reprocessing of the mag and the geophysics, and also geochem. And we'll be coming out with some great targets in the end of this year. So in terms of catalysts, drilling assays from core rigs, from RC, from Trado at Pedro Branca, and then a whole bunch of targets from the Angelac property in Northern Canada. And that is it. I hope that we've hit the timeline.
Yeah, that's perfect, guys. A lot of inbound questions here in the last couple of minutes. I'll start with the obvious one. I think that this captures, the disconnect that we're seeing in the space. And I'm just going to read it verbatim. Any idea of why the drill results are great, but the market does not respond to it?
Well, we had a major shareholder in the form of Jangada that we bought the project from, and they had a massive share position, and they had use for that the cash that they were able to grab from share sales to advance their project. So they were a seller. We were actually able to cross close to 23 million shares to long-term shareholders and give Jangada what they wanted, and give our new shareholders or existing shareholders a larger position. But that did really soak up a lot of our demand. Instead of that going into the market or into a financing, that went to buy those shares. So I think that could be one thing that, when you have what you consider really good news, either the market didn't understand it because it's palladium or platinum. Maybe they just didn't understand how it is similar to a gold deposit in terms of value. Or the fact that there wasn't a huge uptick because a lot of that demand was soaked up by these share crosses we were helping. That could have been something too, Joe.
Yeah, no, that really makes sense. And, just building on that, you had a great slide showing, some of the larger players in the space and, some of the juniors that are discounted. What do you think needs to happen to really move things forward for some of these developers? Do we need to start seeing a bit more consolidation? Do we need to see, more of an ESG movement towards demonstrating why PGEs, or, just your take on that?
Well, from our perspective, I think on the palladium platinum side, there isn't a big player in Brazil, like in terms of all those palladium platinum producers. So I think what we need to do on our end is actually prove, de-risk the project from a development perspective and show that we can really grow it before any of those big producers would want to come in and kind of set up shop in Brazil. But I think that the fact is they've got a ton of cash in their balance sheet. They're making a ton of money, and their shareholders will want them to reduce risk, to diversify out of certain jurisdictions, and make acquisitions and make things happen. So I think that'll cause a lot of activity in this space, and hopefully we're a beneficiary.
Absolutely. Yeah, it would be great to see a lot more activity in the space here. Well, that's pretty much it for time, guys. We do want to thank you for presenting today on behalf of Red Cloud. Thanks again for presenting. And we encourage everyone to stay tuned for our next presentation, I believe is Kuchko Copper. So thanks, everyone.
Thanks, Joe.